And let's get some reaction to this now. From an economic point of view, we're going to turn to Yanis Varoufakis, Professor of Economics at the University of Athens. Yanis, I suppose you're catching up as well on what's going through the parliament in Cyprus, but it seems that a deal is shaping up. I wonder what your reaction is to what you're hearing.
The more inessential aspects of the deal have been shaped. What really matters now is the extent to which the banking sector of Cyprus is going to shrink and the precise manner in which this is going to happen. That has not been discussed in Parliament, and it will be the major sticking point with the European Union, as your correspondent said.
So Monday is still difficult. It's still going to take all the diplomatic powers of the Cypriots to persuade the international lenders to come on board.
Indeed, what it will take primarily is a rational plan that will prevent a situation like that which we had in Ireland, because let's not forget that Cyprus is the island of the Eastern Mediterranean. The crisis in Cyprus is very similar to that in Ireland, except that Cyprus does not have the high-tech exporting industry that Ireland does. And as every Irishman and woman will tell you, it is important, it's crucial that the politicians now do not load up the weaker citizens' shoulders with enormous debts on behalf of bankers that refuse to wither.
Yes, from your point of view, a smaller loan and the fact that Cypriots have to take on some of the pain themselves is actually better for them in the long run.
The terrible predicament of Cyprus at the moment is that the Cypriot taxpayer is going to have, one way or the other, to borrow enormous quantities of money, given the size of the economy, on behalf of bankers that overextended. So the question is, what is the mix going to be between the pain that will be suffered by the taxpayer in doing that and the pain of the depositors of those banks? It's a question of striking a balance of pain.
Now, if what people call the Cyprus haircut does hit the wealthiest hardest, as it seems it's likely to do, and many of these are overseas investors, I suppose that spells the end of Cyprus billing itself as a financial haven, although you could also say that's over in any case.
Indeed, that is a dream that has turned into a nightmare, and it should be dispelled as quickly as possible. It is impossible for a small country, a member state of the Eurozone, without its own central bank banking its banking sector, to become a little Switzerland in the middle of the Mediterranean. It was always a bad idea, and it exploded. But the way that the European Union has handled this dream-turned nightmare is remarkable, because come to think of it, in a short week, we put in jeopardy the sacrosanct concept of state-guaranteed deposit insurance, the monetary integrity of the Eurozone, and, that is the most remarkable thing, we now have a European Union whose single market principle is under threat by capital controls. This is quite unprecedented.
Let's pick up on that now, and thank you very much, Yanis Varoufakis, for joining.